Welcome back to this live session for this NY on Thursday, and we are getting ready for trading unemployment claims in 2 hours time. And in this session, we will be looking at trade setup on gold. Along with also we will be looking at dollar yen and any other USD pairs that might give us trading opportunity. Waiting on everyone to come up here. So before we look at trade setup, we can see that gold so far from the daily, it was on a pullback. If you look at here on gold, it was on a pullback, and that's potentially bringing trading opportunity for us. Good day, welcome back to this live session. You can write Y if you are here, or write yes. And before we progress with the trade setup and analysis, make sure you smash the like button. Have you done that? And also subscribe to the channel if you haven't done yet. I'm looking at gold chart on the daily time frame, and we will be looking at trading opportunity from a key level of support. And gold currently today is initially has dropped, and the buyers coming in the market because globally long term it's a bull market. So before we look at any trade setup, I'm looking at the multiple time frame analysis in this market, looking at the monthly chart to see overall direction in this market. So this is the monthly price action that you can see. And with this monthly price action on gold, right, you can see this is the monthly level that where the bigger picture here in this market, it's a bull market. If you look at here, this is where there is an inverted head and shoulder on the monthly. If you look at the historical perspective here, and with this inverted head and shoulder, boom, the market had, if you look at this, is a very earlier in this time in 2023, and after this pandemic here. If you look at here, this is the 2020 pandemic, and I was posting analysis all around these areas. If you looked at the channel, you can find probably all those analysis there. That might be really something that when you have time, I would highly encourage you to watch all those analysis that I have posted. This is, for example, during the high volatile situation, and this is pandemic. And that's where, if you look at the past from the monthly, there wasn't much these are bigger kind of, especially after the pandemic, the market was crazily bullish here, and then there was a breakup structure here. So this was during the that I think it's Russia-Ukraine war candle, and then drop down here with a bigger move back below with a complete breakup structure, and then the market has taken off that level. And later we see that from the monthly, this is currently a very high price. So the previous month was the market reached at 4380, followed by a pullback. Now this pullback was necessary for a healthy trending market. So if you look at that, there was these 3 months that we have seen was sideways. All right, so we saw that there was a complete sideways market with a narrow doji formation, followed by boom, back to back 1, 2, 3, 4 months of bullish impulse, and with this bullish move back to the upside here. But you can see now the market from this monthly support, the price has rejected back to the upside here. Now at the moment, we look at the current market structure here. I want to look at this monthly price. So far we have first week of the month, and with this first week the price has tested this upper and lower shadow. I hope that the stream is on. You guys can hear me. Can you say yes? If you can hear me, can you? The audio is on. The previous session was a little bit of disruption. All right, so I'm looking at some trade setup here. Okay, no voice? Really? Okay, cool. That's good. This is what I was suspecting, that the market. Yeah, Audiocus, thank you very much. All right, cool. Okay, so here is now we are looking at the monthly price action here. Now we are not trading on the monthly, but with that monthly impulse here, the market has tested the lower shadow of this monthly price action. Now you might see that why we are looking at monthly. The reason we are looking at monthly is to see the bigger picture, right? So that's where you can see the trend in the market. Now looking at bigger picture is very important. Any aspect of trading, if you're not trading based on the multiple time frame, probably you are missing the actual trading way to trade the market. So always look at higher time frame. If it is a monthly, that can give us an understanding, because more often the market will have a very stronger reaction to the monthly and weekly resistance and support. So we see the market tested this lower part and then rejected. If we look at the weekly price action here, that you can see from the weekly, so far this is the weekly low, and with this weekly low it is a bull market, and that is where, looking at the daily chart, okay, so you are breaking down to the lower time frame here. Now daily market structure, what can we interpret in this daily market, guys? This is not only in trading XAUUSD, but also if you are trading euro dollar, British pound, US dollar, dollar yen, everything the same analysis, right? The chart, the market structure, the price action act in the same way. So now looking at this is the 4-hour chart here that I'm looking at the lower time frame for an entry. The price open with a gap. The market is coming to an important support level here, and that is where we might be able to find a possible entry. The market is coming to this 1-hour support as 30 minutes candle close coming. This is almost big rejection. Now expecting this market to break below here, because there is a significant rejection. If you look at, it's a drop down from this support. There was a initial bounce that you can see. The market dropped to that level that we are expecting the price to potentially penetrate back below and then continue to trend back again to the upside here in that market. So we are looking at, if we look at this 1 minute chart, where now I'm looking at, guys, here for the market to penetrate back below, because there is a stronger bounce followed by rejection. We are on a level that we can look at possible entry with full risk management, of course. So here is quite a few long week rejection, Now below this level, if you look at the 15 minutes chart, I'm looking at the multiple time frame, there is a massive bullish fair value gap. With this bullish fair value gap, we want to see the market has tested the lower shadow and then potentially return again back to the upside. Without breaking that low, we are not entering yet here. Looking at the market to break that low, and once the price prepare for this move, we can look at entry to the upside. The market structure is very interesting here. Ready for an entry? We want to see the market has managed to break this support before we look at any entry in this market. Trend trading is what we are looking at. Okay, so the overall trend, the global trend is bullish. Now the market may not test this low here. If it doesn't, then I'm not looking at entry yet. We want to see the price has tested this lower part. This is the support that we are looking at, and it would be a good entry if the market overextended below here before we look at any entry. Welcome to the live session for New York time, and this is what we are looking at possible trade setup in this session here. So the current support is here. This is the current support. So this is the intraday support, okay? And so we have seen in the past there was a significant breakout here, and the market is maintaining that uptrend to the upside. And this is also the daily resistance line. and also the daily high. So this is daily resistance. The market, after breaking that high, we can see the market had a rejection. It's now trying to trend again back, and this is not a very good level at the moment for bullish trade setup, because if you look at the daily price action, you can see the market is on the daily resistance line, and that's where we could see the market to potentially you see getting rejection from that level. Why? Because this is where the daily market, the price in the past also has got rejection. And there's interesting fact is that the market is rejecting here also from 10 EMA. So because the market is rejecting from 10 EMA, the possibility here that this market to remain bullish for long term, right? And that means if we compare, guys, this 1 day move, see that this is the Friday, and how many pips on this day from the daily? 857 pip on this day. Now later, now this is the 4th day, the market is trading in that range. So that's smaller range is giving a possibility that this market is the sellers are weaker in response to the buyer. If you look at the buyers, it's a bull market, stronger bullish. When you're looking at the seller, they are very weaker because smaller red candles, bigger green candles. Therefore, the bigger flow in the market is bullish, and therefore that's why we are looking at the support. This is how we can understand the important area of value in the market, right? Because at the end of the day, it's all about confluences and using the probability in your favor to find bigger entry, holding that winner in the direction of the major flow. So that's why it is important that first of all, understanding the directional bias, and it's always you can understand from the comparison between the buyers and sellers, because the candlestick pattern that you can see carries a lot of information from the buyers and sellers, how they are doing. So when you look at 1 day, the market moved 1000 pip, and the other, if you look at that 5 days, the market dropped 700 pip. That means 1 day was strong bullish, 5 days or 4 days where sellers couldn't drop that market that much of what the buyers has done in the market, right? That's how we can understand the directional flow, and that's where we are looking at an entry opportunity. Because when you are entering a trade, you just need two things, guys. Simple strategy. You need only two things. One is to know that either to buy or sell, just pressing the button buy or sell based on the direction. Next thing that you need to know, where or what time you should be buying or selling, from what level. So the level that we are looking at here is support or resistance, and this is the current support. The rest is depending on the price action that for the entry. Where are you from? I think I have answered it. yesterday also. Okay, here is the drop that you can see, and what we are looking at this market to drop down back below before we look at an entry in this market. So what's your bias today on gold? As there is a coming up, if you look at unemployment claims in less than 2 hours now, so that's gonna bring some volume in the market. And as Thursday and Friday coming, it's gonna be pretty interesting. Where are you from originally? Originally I am from Earth. Just making some fun. Where are you from? You can share your location. I'm in Melbourne, Australia. Where are you from? And also how long you are trading, what time frame you trade. You can share some of them. Okay, very good. Awesome. Let's have some music. And $15 minutes, 5 minutes. Yep, that's a good time frame. Trading on lower time frame. And you want to trade here 1 minute and 5 minutes, which is basically the 5 minutes time frame is where because if you combine the multiple time frame along with the 1 minute and 15 minutes, that is where you can have better trading opportunity. Yeah, so basically when you trade on the lower time frame, right, such as 1 minute and 15 minutes, so this is what I trade, because I never trade on 1 minute only. Okay, so if you trade on, especially on the lower time frame, you must combine the multiple time frame in your trading, because if you are not combining the multiple time frame, then it's very difficult for you to identify the direction of the trend, because 1 minute time frame may not give you the clear direction or clear trend in the market. Because if you look at the 50 minutes, you can see a completely different picture what you can see on the 1 minute. In the 50 minutes, you can see this is a complete consolidation here. All right, so it's a sideways consolidation. And if you look at the 1 minute, you can see that it's a different picture, right? Big move, drop to the support, the market is now on a trend. So it's crucial that you keep your edge by combining the multiple time frame. There's a lot to learn here, as you mentioned in our previous session as well. To find a high probability entry, always look at the false breakout or false breakdown in the market. That can bring better entry opportunity, because that's where you can see that when the market is moving. And the market creates more often a lot of false breakout and false breakdown. And when you see that the market creates false breakout and breakdown, that's where, in fact, it's where there is a liquidity grab. It's a concept that once you understand, you cannot ignore it, right? Let's understand that. And once you understand, you can see why the market moves in the way it moves. We'll be going in depth on that. Okay, so it's now in this lower time frame trend line. What you can see, and with a series of lower high, it's breaking that low. There is an extended fair value gap here. Okay, so fair value gap is crucial because that's where you can see the imbalance in the market. The market normally moves from imbalance to the imbalance. If you see that there's a greater imbalance, this is where the price normally moves. And because if the market did not balance the previous zone, look at the 1 hour, you can see it's a big bull candle that has not been balanced by the buyers. So here is the possibility that the market may come for a retest and then to trend back again in the market. And you can see it's a very interesting. The reason I'm saying interesting is because there is a head and shoulder that you can see, and that head and shoulder may break that low here and then could continue to trend again in that direction. Current support and looking at the market to penetrate that low before we look at that entry in this market. We are progressing towards the session coming later is employment change, and also unemployment claims. So CAD It's tomorrow employment change. Today's dollar news is unemployment claims. Okay, so that's a fundamental part of the market movement. And how does this data also can impact the market movement? That's what also we'll be discussing here. Okay, so if you look at the unemployment claims, all right, let's understand some of the facts that might happen. So the forecast is 209k. ADP non-farm employment change was forecast for 5k, but it dropped to minus 32k. And if you look at the DXY, that was significant drop on DXY that you can see, and that's the outcome of that ADP non-farm employment change that you can see. And if you look at this gap open on DXY, also some of the reason that the market has reacted to those even before releasing that information, because there's statistics that can predict the market, what might happen. And if you look at gold here now, then the market also showing the same kind of price action. The dollar was weaker with the ADP non-farm employment change, and there will be what can you predict here with the unemployment claims here? Will the unemployment claims will be rising or dropping? Have you got any idea? There is internal relationship here. Okay. Because there is a downside on DXY, we may see that reflecting on gold as an upside bias. So we are looking at, therefore, only bullish trade today, especially from key level of support. Looking at the 4-hour here, you see that there is a gap open. As soon as the market will test this gap here, we can expect a reaction, right? And this session so far, the market has moved it back to the upside to nearly to 91 pip. Are you guys ready for a short-term entry here? We want to see that the market managed to break this low here. And from the 1-hour, this is 1-hour candle close coming. That's a significant rejection from this high. If you look at this, this is a very high on the 1-hour perspective here on gold that you can see. And without breaking that low here and rejection, we cannot look for any entry, because we want to see the market has managed to break that low and then returned again back above here. So you can see there is a break below here, which might bring that market back below to this lower time frame support. It's breaking that low, and still didn't test this support. And we will be using here possible for this possible move back to the upside, a pending order for a short-term move. And still looking at to see so this is 1 hour price action that you can see. It's closing in 2 minutes time. We might be looking to enter by market, because once this candle close, expecting an initial rejection back to the upside here, and there may not be a very stronger move, but what we are looking at here, guys, that market to test this support, interestingly didn't penetrate that back below here, and so 1 more minutes for this candle to close. And as soon as this 1 hour candle close, it left a gap here. Do you think it's gonna bounce off that level? Now I think the market to so 1 hour candle close here, which is a narrower doji. Now breaking below can bring that a possibility for going back to the upside here, and reading market structure sometimes become very complex, especially when you see the market in a consolidation and narrow trend. So what we are looking at here, the market to break low and then to bounce off this level. So breaking below here, we will be looking at entry, keeping stop loss at least 50p below our entry. So it's gonna be nearly to this level, still not entering, but once the market managed to break that low here from this support, we will be looking at an entry after breaking below for this potential move back again to the upside. Hope that gets. Okay, so it's breaking that low here, coming down to the 1 hour support. So I'm going to look at now, I'm going to go long here on gold with a current price, keeping stop loss below this low. We'll be taking half profit at this level, and then we'll be running for the full profit later. So at this point, I'm going to look at a long position on gold from that level, stop loss at 4119.86 with a tight risk, which is only 1% risk. Stop loss at 4191.86. And TP target, we will be keeping that one open for. So I'm entering this trade here, and so here the market may penetrate, and the entry here that we are looking at this market to initially to bounce back up once the price managed to fill some of this imbalance to the upside here. We will be looking at this trade to close partial. Now 1 hour price action here, there is a pretty long rejection back to the upside, looking at the price action to have potential rejection to the upside. So there is a pretty strong consolidation in that area. There is a big fair value gap, and I do not expect this market to drop to bounce big a lot. It's a short-term potential bounce because the market on the support, and also the 4 hour price action, the price has just tested the 4 hour support, expecting it to have another rejection here in that market. So there is a deepen in this smoke. So once the market managed to break this high above this level, we will be managing this trade accordingly. If the price crossed this high here, nearly to 40 pip, we will be taking partial and then moving the stop loss and entry. You want to see that first of all breaking that high, as this market is, look, it's just broken that support. The entry that I have entered at 4198.02. So this is my entry here, 4198.02. There is a initial rejection here, and this is a trade for this call for the support. We are long on gold. I'm at entry, just have entered into the profit area. Now here is to look at an initial bounce that I'm looking to see if the market is being able to cross that high. The market if you look at, there is a breakdown and then bounce. Now so the 1 hour level, we are running a buy trade. By the way guys, in the meantime, if you are enjoying the live session, make sure you like the stream and also subscribe to the channel. If you haven't done yet, press the notification bell so that you are not missing any of the content that I'm posting every day. And there is an upside bounce here. Now I will be explaining in depth of this trade, the strategy, education, and everything behind. Is that running trade already? Yes, this is a running trade and we are at little above the entry. It is the trade that just we have opened after break of this support. Now I'm not expecting this market to be super bullish at the moment, therefore any move upside, because the market in a sideway, if you look at the 4 hour, it's a sideway market. So all the lower time frame, it's a sideway market. So any significant move to the upside can give us a possibility for this trade to close partial and moving the stop loss and entry, because the market not in a very strong trend, so we even if we hold it for bigger profit, it might just end up coming back again to take us out of the trade. If I have 1000 USD balance, can I use 0.3 into 3 lots? No, depending on how much risk you are taking. So if you take 1% risk on a $1,000 account, that means your risk is $10. And it will depend also on your stop loss PP, and that's why I always encourage you to look at how many pips stop loss you are placing in. Right, so there'll be more instruction in the premium group here that how you can find out the lot size, because you need something to calculate the lot size for you for each trade depending on the stop loss gap. Each trade has a different stop loss, right? So it's important that you always look at your risk for each trade individually. All right, so there is a bounce here and we are up now 31 pip, and I want to take this now partially more than 50% and moving the stop loss at entry. So closing, I was closing 0.3 lot, and then moving the stop loss at entry means that it's a risk free. So my trade is risk free here. I have moved right, so we gain here to 35 pip. The rest is running. So here it's now on a bullish move, so it's a risk free. Let's see how far it goes. If it had a very stronger breakout, we may be able to take that full trade up to this level. And as coming up, as I mentioned, the unemployment claims is a big one. So if DXY getting super weaker, gold might get super stronger, and that can create a significant move in that market. So for 1000 USD, if you look at your account, then with this stop loss, if you look at here is nearly to 60 pip stop loss here. So your risk has to be nearly to $10 for this trade. And each trade has to have a different lot size to keep the risk same, right? So each trade, number of percentage of risk that you will be taking has to be fixed. This is where most traders miss that point, right? So it's not, let's say you trade always 0.1 lot, that's not gonna work for you. If you use fixed lot, then what will happen? If you open a trade with a bigger stop loss, that's gonna be a big minus if the trade goes the other way. If you're using smaller stop loss, then it's gonna be smaller risk, reward also getting smaller. But if you keep the lot size variable, are you getting my point? If you keep the lot size variable, that means you keep your risk fixed. Each trade you're gonna close at, for example, in a $10,000 account, you want to risk, for example, $100 per trade. Now, each trade has a uniform risk all the time, and each trade has a uniform reward for all the time. That way, through your the second half has gone break even. As I mentioned, this market may not be very strongly trending at the moment. It's a sideway. We got out with this second half break even, and we will be re-entering again. It's just the first trade because there is news coming, expecting the market to move. Now, when the market not trending, the market will do like that more often. You'll see that in a sideway market. So you need to use sometimes different strategy for a sideway market, because when the market in a sideway, it's not gonna give you a big spike in one direction to take a bigger profit target. In that case, it's always a good idea is to manage the risk accordingly, but do not expect to have massive move in one direction. The market not gonna do what we see that happening in the market. For example, this 4-hour chart, look at this. You see this is a full choppy zone here. It's a one candle range, almost one or two candle range, right? And being practical means that you trade exactly. See, one green, one red, one green, one red, one green, one. It's a one candle range. Now in this one candle range, if you are not buying from a very low, which sometimes very difficult for you to predict that what is the low, once you can enter from a key level, okay, so after the stronger impulse, you can make the trade risk-free. Okay, so what is the next step? I'm finding it really hard to keep the trade when it's running in profit, and I want to close it quickly and take profit. This is not only you, okay? Every trader, and I can guarantee that everyone watching facing the same problem. Do you? Has anyone here that don't face this problem? Because every trader I have come across with as in the mentorship, or as a trading together, I found the same. It's really hard. Okay, now how can you maintain that? Now you see that one of the best way to do that is take little profit and then let the rest run. Sometime more often you might get second half going up, but once one will go in the direction, it might go a lot. Now this is hard, especially emotionally, right? Because how our brain works based on experience, guys. This is real stuff. It's gonna change the way you look at the market. Our brain works based on experience. If you have experience in the past 2 to 3 trades that you hold it, gone back to the profit, came back and took out of your trade, the next trade, you're gonna hesitate. It's very normal. Then how can you attain that accuracy where you don't hesitate anymore. This is what I was discussing and posting. Okay, and if you look at the sum of the trade, that this is recent past trade that opened, right? Now this trade opened when I was not looking at the market. I was not looking at the chart, and the trade opened itself and went to the profit target itself. You can also do that, because when we execute a trade ourselves manually that we are opening here, unless you become a very experienced trader, it's get harder emotionally, because you look at the trade and you had a past experience that the trade might go wrong and get out of the trade. So there's a chance for closing the trade earlier. How about you even don't look at the trade, you even don't look at the entry, you even don't look at the stop loss, you even don't look at the profit target. It is straight goes to the big profit target hit with full risk managed system. And this is what you can see, this trade open like that. You can trade like that. It's now 2026, guys, nearly there, 1 month away. And I have shown already in the academy, the members, many of the members trading with me in the academy like that. And this is what I'm training every member of the academy to trade like this. That don't look at the trade, set the trade, forget it, let the market do the job for you. So if you don't look at the trade, you are not exposed to the emotion coming with that trade. You can set all parameters. You can set your risk. You can set your lot size. You don't have to think about the lot size also. Okay, if you are in the academy, join me always in the Zoom meeting, Zoom classes, where I'm showing exactly how to do that. So don't miss out any of this, because this is how we can keep trading every single day with proper risk management. Now let's look at here what we are looking at this market structure. Now from the lower time frame, here is the you can see the market didn't make a big move. Right? That's why we got out with the trade earlier, because the market is not trending here. And okay, so let's delete this, all those levels, to see that if you look at here, you can see this is a fully choppy market, right? This is what I was talking about, that when the market is choppy, you can't expect it to trend aggressively in one direction. Welcome. So here is that price action that we are looking at here in that market, and this is a drop that you can see in this market, and this is what I'm looking at this market structure to potentially come back below. So here is the lower time frame. This is the 1 hour price. If you look, this is a big doji here. Now what we could see that potentially in this session here, that the market possibly to test that low and eventually could bounce again back here in that market. So it's now on a drop here, right? So we can see the market is in this move, and the structure, the way it has created, it's very, I would say, that difficult to buy this market at the moment from this support again. Instead, we might see that further deepens here, and that might bring that market back again potentially to this daily low. And one very important point that we can note down here is that the market rejecting of the daily 10 EMA. So as we are on Thursday, there's one more day for this market to run for this week. So if you look at this green candle, that massive bullish candle created on Friday, followed by 4 days so far, still this daily candle has not closed, but it's created. If you look at it, still there is no green move here. That might be potentially boom, bounce back again to the upside here in that market. Okay, so it tested that support again, and we have one more hour for before this before the unemployment claims coming. Now let's also look at Powell's speech and labor data in focus for the next week. This is coming in a speech from Powell today. So the market in a level where if we see this is now, I wouldn't consider it as a selling market at the moment. Instead, if we see that the price has, because you wouldn't be able to know exactly what level the market now next to react to that, because it's not a trending market very aggressively. So it may be that this market, before reversal, it might even had a stronger breakdown as well. Now, if you look at this, you see this is the 4-hour candlestick pattern, right? We have 2.5 hours for this candle to close. But this 4-hour candlestick pattern can be, if you look at here, can be a bear candle, all right? So in that case, this market before the weekend closure could have a tremendous false breakdown, and then it could bounce off that level again, or might have a complete break below here, or sudden drop can happen. As I mentioned earlier yesterday, that we discussed that the market can go in any direction depending on how the price action will be forming. In this zone, that if you look at the 4-hour price action, here is quite a few false breakout that we can see. Those long week false breakout in fact represents that there is a, whenever the bulls pushing that price, rejecting back below, and that can potentially lead the market to have sudden breakdown. It's not certain, just a probability, and then could bounce off that level. So if you look at the monthly and weekly support, there's a previous weekly resistance, which is turn support. Then I'm changing the time frame is because so that you know exactly what the market is trying to do. Support. Locally, we can see there is a downtrend here that you can see in this market here in that area. So with that downtrend, and 4154 is very important level that you can see, which is very low here. But now at the moment, if you look at, this is a downtrend here, pullback, another more pullback. So the market is here maintaining series of lower high and lower low, and in that series of lower high and lower low, we could see the market to break any of this swing high and then can drop. So at the moment, for short-term entry, we are looking at breakup structure for us to be able to sell the market. Are you guys with me? Let's have some music. 4187 support. There isn't any important support here. This market, if it continues to drop, daily low is here. You could see the market to retest again to the daily low. So far managed to drop down, and therefore the entry can be from a breakup structure in this downtrend. So if the market breaks from this structure to the upside and showing a proper confirmation, that is what we can look at, that sell here, and that move can bring that market here to this daily low. Okay, so from this daily low, either the market could push further down or can break back to the upside again to the daily high, and that can start depending on how the market is reacting. So if this market drop here, now how the market we can enter for this potential drop is once the price here create a stronger breakup structure, a very strong bearish confluence, this market may drop again back to this daily low, and that's where also the daily 10 EMA, which is a very important fast EMA, and this zone can be two ways we can look at. One is this can be a starting of a new reversal to the weekly high, as we are almost approaching to the weekly level. One possibility. The other possibility is that the market may continue to drop depending on how the price action is forming here, especially if it creates an inverted head and shoulder like that, the market going like that, that's a sign of boom, it's a reversal, because we are almost nearly to the end of the week. So now it's having some reaction in this area. How do you manage anxiety when trading? It's a very relevant question, isn't it? You know, there was an inventor, I think he invented telephone, if you remember, telephone maybe, long ago. There was a story that we have read that it might be a fictional story, but he was going in a bus and then suddenly someone pulled his ear and then he couldn't hear anymore. After that, like, his hearing dropped, and then he invented the telephone or telegraph maybe, yeah, so that he can solve this problem. Trading like that. So if you know, this is how I solve my anxiety in trading, is not solving it, but solving the problem of trading, right? So if you don't look at the trade, then you don't have anxiety. So don't look at the trade fully. Trade in a way that everything is managed. Guys, this is probably have heard of, but you haven't done that. This happens over and over again. How many of you can relate this? I had a strategy, fully risk managed, and was trading. And then what you can see that depending on the market condition, because there is an error can happen. But if you create a system that trades directly and manage everything for yourself, for you are not looking at the trade, then you don't have anxiety, do you? Because trading is highly emotional, which is everyone will agree with that. But let the market do the job for you. And no matter what platform you are trading, you can do that. Very confidence. Yeah, this is what, because of the practice, okay? And this is what you can attain all the time, okay? By maintaining a system that can trade for you in another way. How about you wake up in the morning, all right, go to the work, and then come back at home in the evening, spend time with friends and family, check your trading account. Trade is done. Okay? Trading is done, risk is managed, everything is done. Spend 10 to 15 minutes a day just to look at everything. And it's a lifetime. That's the solution of becoming a trader, because more than 90% retail trader not successful is because of the emotion, because of that anxiety coming with trading. Okay, so in this breakout structure, the market's slowly building that momentum here back below. And this is the current level of resistance. Okay, so in this area that we can see, there is initial drop, and looking at this market to show us a downtrending move here. Okay, so we might be able to find another entry in this area, and especially breaking this high 4194 can give us an entry, but there is a news coming in from this time 40 minutes, so we have some time before the news to come up for potentially another entry. Here's the move that you can see the market is trying to break that high, waiting for the price to go ahead and retest and then reject back again. So in a downtrend, and we are looking at the market to show a potential entry. Now when you are watching the live session, guys, what you can see that there are some confluences we are using, right, in those levels, that looking at 4194 level, okay, which is key level that we are looking at this level for an entry. But in the beginning, as a trader, it's hard, right, to find out that, okay, is this level, should I be buying or selling? This is the question first come when you want to enter. So, and that's why it is important that you have some kind of tools, assistance that can help you to make your analysis and trading decision. The best trading practice is when you make your trading decision, but you get full understanding about the market condition, the market structure, analysis, and everything. So if you look at the current level at 4194 is why I placed that entry there, right? So this is a very important level that you can see. And if the market cross that high, we might see that immediate rejection back below here in that market. And this price, we could see that from the daily to drop back to this daily low here. If you see the breakup structure back above 4194, we will be looking at selling in this market. He's Alexander Graham Bell. So it was Alexander Graham Bell. So basically, he solved the problem by not hearing in his ear by inventing the telephone. It's interesting, isn't it? So with this doji, the market start to break below here. We are progressing towards this coming up unemployment claims. Okay, so in 30 minutes, this is gonna be really interesting because with this news, once the spike again hit any of this high or low, we will be able to find another entry. Okay, patience is key. It's not ended, we started, just we had one trade, small one, but we want to enter another one again shortly after. Would the daily low differ depending on the time zone of the broker? For example, you are in Melbourne. Would the daily low differ depending on the time zone of the broker? My broker is UK. Daily low shouldn't be differ because the market, the price is universal. The candle could be, shape could be different, but the low should be the same. The market, the price wouldn't differ for different, might be few peep, but the candle formation could be different, but the price level will be the same. Okay, the candle might, it instead of like that, you might see that, let's say for example, candle start from here with a gap like that, but the levels should be the same. But the time that your day starts and ends is different to mine. confuses me. No, I think daily close is same for all. It's same for all. Daily is either it's in, because at the end of the NOI session, okay, the daily candle close, and I think it's same for all broker, isn't it? It's same for all time, all. So if you're in the UK, do you see your daily candle closed in the morning or open in the morning? Hello sir, is liquidity, volume and demand are related? Because I have all the same. Okay, so hello sir, is liquidity, volume and demand are related? Okay, so if your candle closing midnight UK time, then you are the same with us. Okay, so it's universal for everyone, same time. Okay, the chart will not create different pattern for different country. Okay, it's gonna be the same for all. Regardless of your zone, the daily candle will close at the same time for everyone around the world. So it might be in your zone, could be a midnight, or somewhere maybe could be in the morning, or someone could be in the middle of the day. Okay, so this is what one thing. Secondly is, so it shouldn't confuse you, but yeah, no, sir, is liquidity, volume and demand are related? Okay, so liquidity, volume and demand, that means supply and demand, related in a sense that they, like, these are the confluences that you need, but they don't like, for example, 10 EMA, 20 EMA, okay, two indicators, just difference in the values, not that way related. Okay, they are very different. Liquidity means that there are more buyers and sellers in a specific area. Now even a low volume market, it can be that there are liquidity, okay, and in a low volume market there can be supply and demand zone. So the volume means that the load, okay, right? Imagine that you are driving a bike or car, right? So your speed, you can consider it with the volume. So it's very easy to understand that way. So let's say you are driving a car. Now, how fast you are going is your volume, right? Because if you're going, let's say 20 km per hour, that means you have very low volume. the market is not moving. So the more load coming, the more order coming, there are more volume in the market. Okay. Secondly is the liquidity. Okay. So liquidity means that you don't have to worry about filling your order. That is liquidity in another way. Okay. So liquidity means that as a retail trader, probably you, me, doesn't have to worry. As soon as we press the button, the trade is taken, right? 10 lot, 20 lot, 50 lot, no problem. But if you're an institutional trader, they have very, very good prediction about the market. But the biggest challenge for them is the liquidity, because as soon as they are buying, the market is going. As soon as they are selling, the market is dropping. So they don't get enough price. If there is a lack of liquidity, then what will happen? As soon as they press the buy, before their order filled, the price will go up and they won't get the enough price. So let's say they want to buy 500 lot, for example, and their order will not fill if there is not enough liquidity in the market. They might get, let's say, 100 lot and the rest is unfilled because someone else on the other side need to take that order. Then if they are a buyer, someone need to be willing to sell the market, otherwise the price will go up. Okay, it's a supply and demand. So that is liquidity. So therefore, the more liquidity, the faster the order will get filled within a short period of time without fluctuating much the price, because there is a load available to take on the other side. That is liquidity. And now supply and demand is where the area of value, at what level, at what zone the buyers interested to buy and the sellers interested to sell. That's the supply and demand. Okay, so that's the simplest way to know. Now, with the car analogy, is the speed is volume, your fuel is liquidity. Okay, and your station is your supply and demand zone, where you're gonna start or where you're gonna end your journey. Okay, so here the market, what we're looking at this level. Okay, so here we have only 20 minutes for the news to come up. I'm patiently waiting for the data to come, and once the data is coming with unemployment claims, we can look at new move in the market. So here the market, and I was waiting for 4194 level to see that how the market might be reacting to that level. Then to return again back below. This is the level that looking at before the news. If the price goes up, we might be able to see a drop, and if the market moving in a sideways with the news, even we could see a spike up. What's your thought on the news? Gonna see a spike up or a spike down with the upcoming unemployment claims? So this is the level that I'm looking at for the next entry, and then to potentially reject again back from that level, and we want to see that the market is crossing that level, that liquidity zone with a stronger move here is, but at the same time the price action showing up that there is a possibility for here it's a bearish pricing. He still can continue to drop down here. But I don't want to sell from the low. We want to sell from a deep. Deep means that break over structure. So here is the drop. So complete break below. I'm ready to enter after break of structure. There's a 15 minutes crossover of 10 and 20 EMA. Yes, Aljala, yes, we are looking at potential breakup structure to that YOLO zone. This is where the previous resistance level. The market can continue to drop, but as the news coming, expecting a rejection back, and we are looking for sell after this breakup structure. And if the market goes there, depending on if with the unemployment claims the market suddenly drop down below, even we could see a reversal from this level. So if we see a significant reversal, we'll be looking for buying later. But at the moment, looking at we're looking at this market to go back to this resistance line where there is a high liquidity. This zone that you can see is a high area of value. Here the market is, this is bearish price action yet creating in that area. The price in a very crucial level here that can continue to drop down as there is a multiple rejection here. It's gonna be risky entry if we sell here. Okay, so how to identify that area of value? Okay, all right, so this is a very important question, and this is also thanks for asking. This is a very important question because when you have those answers, then it becomes easier to make trading decision. Okay, all right, now to identify the area of value, the first thing that I look at when I'm identifying the area of value is not to look at the past area of value. Okay, so what do I mean by this? The area of value is where in the past the buyers or sellers were interested to buy or sell, in a simple term. Now this is not an area of value. Okay, don't misunderstand that. Where the buyers or sellers were interested to buy or sell is not an area of value, because human mind is also making all those pattern right here, the trading decisions, even if it is a program, but it still is coming from thinking from the previous buying and selling. So what the previously buyers were or the sellers were interested to buy or sell, those level, everyone knows it. It's a very simple thing to understand, right? For example, if you look at this level, where the sellers were interested to sell, the market has dropped to this level. The price has gone near to that level, and you can see there is another drop here. So this, you see that I didn't draw my area of value at this level. Why? Because in the past the sellers were interested to sell from that level. So this is not an area of value. So what is the area of value? The area of value is past that level. And once it passed that level, see that what confluences you have after passing this level. Remember one very important criteria. The area of value will be area of value if in the real time the buyers and sellers shows interest in it. Firstly. Secondly, that level other bigger traders have grabbed enough liquidity for the move. Now these are the vital question that directly can be answered. If you look at here, you see this move straight going back. Now if you see that a level and area of value, that means that the previous level where the buyers or sellers interested to buy or sell had a false breakdown or breakout, that becomes an area of value. So in a simple term, if you look at if a level that was interesting for buyers and sellers had a false breakout, that's a new area of value. That's how you can identify. Now this is what we are looking at, this market to go up, as there is a news coming in 8 minutes. You see this move back again here to the upside. So you can see the market is crossing that level, and if it creates a false breakout here, it becomes a new interesting area for selling. So looking at the 5 minutes, this is a big 5 minutes candlestick pattern, has crossed that high. On my chart, gold bounced off the S1 support. What do you mean by S1? You mean that M1 support? this is here, you can see it's getting rejection here. So we have 5 minutes to go for the news to come up. Delete those levels. So it's still here is showing possibility to the upside, and we will be looking at the market to cross that high, and if it return again to the direction of the major trend here, and I think that spike coming in few minutes, that can create significant trading opportunity here in this market. So we have 2 more minutes to go for this. Now the market has crossed this level because there is a news. We cannot enter at the moment. We are waiting for the news to come up, and that is what we are looking at. As there is data coming, there is a possibility for a bigger move, and so if the spike happens below from that level, it may bring that market back below here to the daily low. If the spike happen to the upside, we might see a new starting of a trend, but I think still there is a possibility for further downside here, depending on, of course, the new market structure. And once the data has pending, boom, that's a break below. If you look at massive drop down, with a lower time frame gap open, the market rejected back below from that area of value. And if you look at, awesome. interestingly, the market has reacted to that level, and this is the 4-hour price action. If you look at the 1 hour, that's and the 30 minutes. Now there is a possibility to come back to the daily low. This is the daily low here. And if the market breaks down here, it may even come back below here. All right, so here is the market has created a bigger drop here, and then it's on a sideway in this area. And I'm looking at the multiple time frame analysis to see, and if this 1 hour market structure that you can see, this is the level that the market may go for. See, the way the market structure has formed, this is the 1 hour price action. All right, so it might struggle to break the low, but if it breaks the low, it's gonna potentially come back here. Created a very interesting structure here. here is the bearish engulfer. Now if you look at now, it's not creating any, like the stronger rejection here. Now this 1 hour price action that you can see, this is crucial, because if this candlestick pattern, it tested this high again here, it might go for another test, potentially could go. But at the end, if this 1 hour candlestick pattern closing as a narrow doji or a red candle, we could see the market to come down. But even it can continue to rise here. So see that what kind of market structure is for me. Still, it's not creating any clear directional bias. Might pass this level again. The price on a resistance level, and this level can be a level that the price could continue to drop, and where we are looking at this market, if you look at 5 minutes also, So it reached that resistance, drop down here, the trend line it has created, and before the candle close from the 1 hour, right? So it's the market is on this 1 hour support. I'm looking at possible entry. The 4 hour price action showing that highly bearish now at the moment after this rejection from this level, and that can lead that market to drop down here. And with the 1 hour, that you can see also the market structure is showing that possibility to be bearish here. Now to look for an entry, 'cause until we see the directional bias, it's always a good idea is to be patient. Five minutes price action here that's showing, if this is, you see this is closing like that, we might see that another sideway market moving in that direction like that. So we will be using the pending order if we enter here. To enter, the market needs to make a sense. That's where the first thing that we need to look at. Now it's slowly turning to bear market, right? So you need to see the market has created enough structure that can define the trend, which is very important, because sometimes the market will move that it's not gonna make any sense. If you look at this market here, it's still not making any clear directional sense. So can continue, if you see there's a series of higher low that can trigger that market to back up, and at the same time there's a trend here down that can bring that market below. There's another scenario can be that the price resting that 1 hour resistance again and then coming down here. That's the more likely to happen here. You look at the 1 hour, it's the 1 hour resistance. So I'm looking at potentially placing a pending order from a key level, and so we have 11 minutes for this 1 hour candle to close. And this 1 hour candle has rejection from this higher price. Series of higher low here, and this move can penetrate up here before it trend. Daily price action that you can see, this is the daily 10 EMA, and may move entirely in a sideway. This is a very sideway market to enter. I'm just waiting for the proper zone to enter. Because with this news candle on the, and then the market just creating sideway market structure. The market can entirely drop down here. This is what I'm looking to see. If the market breaks down below, then we will see the trend. Welcome guys, welcome back to this live session here that we are looking to see the market slowly trying to break that support and expecting the market to trend and then continue to drop down back below here to create a new lower low. So 1 hour market so far, it's a now has created the doji. So that level can be a selling zone now, because there is a selling pressure already from that level. To enter in a trend, guys, this is what I'm looking at. Still, we don't see a stronger trend, and so you might be able to find an entry shortly for with full risk management here. Looking to see that there is a doji that can be starting up a move. It's the 4 hour level, and Now the price reached a very key level. This is the 4-hour candle resistance line, and from this level with around nearly to 50p stop loss, I'll be opening sell, keeping stop loss above this high, and we'll be keeping the TP target below this low here. And this is a market order second trade with full risk managed setup. Here nearly to 50p stop loss, expecting with the candle close the market to drop down back below to the support to create a new lower low. The market is at this level now. We'll be keeping the stop loss nearly to 50 pip. Sell by market, stop loss at 4204. So placed sell here, and I'm sharing the same trade also, premium. So place a trade here, so which is sell position, second position for today, expecting the market to respect that level and to return again back to the long-term support level here in that market. And there's a 1 hour candle close that you can see, which is pretty stronger move that you can see, and 4-hour candle close also that you can see the market has created a big rejection to the upside, expecting the market to trend back below, and the market managed to trend back down here for another retest. The market reached that order block also to the upside and expecting it to break that low here, and we can see the successful drop back below. It still can come back to this daily low. The price at daily resistance here, and so there is a move back above here, and go to stop at 45 pip. The market has completely entirely bounced off the level, so this might be moving back again. This is the daily level. So the market may have changed the trend here. So there's a 15 minutes again crossover, and the daily 10 EMA rejection here that can lead the market continuing to rise back again to the upside. So the mixed day, the first one got directly profit. Okay, so the previous one we got that one, the market here, if you look at the lower time frame, it reached that key level, and then so the market has broken back below, reached that key level of resistance, and again rejected back to the upside. So because it's Thursday, we might see that the change of trend, and when the market changes trend, you could see the market do that, and that's the part of trading. Okay, so we are looking at the next entry shortly after. We'll be looking at further trading opportunity later today. So thanks for joining here, guys. We will be looking to see what we have next, as Thursday and Friday are very important days. Later today in the NY session also we'll be looking at entry. That being said, thank you for joining, and I'll see you again very soon, again trading in another live session.